going. There we go. Let me get my stream up. What's going on, Sucio? Nothing much, nothing much. Just getting set up here. All right. Today was fun as hell. I'll say that. Yeah, it was a lot of fun. I wish every day had this type of volume behind it. Um, so I got the stream up. A few people stepping in. We got Kamal and For the Dogs. Good to see you guys in here. I'm gonna wait just a minute before we get started here. Just want to see if there's any people just showing up. But how'd you guys do today? You guys make some money? El Sucio, it sounds like you did.
Bro, I've had the same week. I had this. I fuck with Robinhood now and then, just as a fuck around account.
Yeah.
On my phone when I'm working and shit. I do mostly swings, and I did 5, and then I'll withdraw and then like let it burn out, then throw some more in at some point. If I see a good trade. But I started with 5, and it's for 6 now, 100 to 6 grand this week.
Dude, that's awesome. That's awesome, man.
Yeah,
Dude, I feel
most of it out.
I feel bad. I sent an alert. It was a little scalp end of day, but this play right here. So you see how we, did all this after Fed, right? Well, this guy right here, I alerted this short, and I got out unfortunately, but me and Hoosier were still kind of BSing in voice chat. I got in contracts right here for 250. Bro, in 15 minutes they're worth 950. It was nuts.
I got very, very top right before Powell on an SPX. I think I had a 4280. The low fill was 239, and I got it at 250, and I was like proud of myself, right? Started doing it. And then it did that big fucking dump, set trail stops. And there was a system-wide, like a street-wide Oprah error today, which it was given like misquotes or whatever. You couldn't set stops or trail stops on anything, and so it like hooked up and had my stop at 90 instead of like 7.
Oh jeez.
And I spent the whole rest of that fucking all that volatility with the contracts in my shit on the talking to support, trying to get the resolution team to respect the order, because obviously like it's timestamped, see the levels, you can see where I set it, all that shit. And I just knew that they were not going to do it because it was something that wasn't damn right. It was a vendor or something. I'm so pissed. I'm watching it fade to 90. And she's like, well, sell them now. And then I'll price improve it, when I'm like, you're not going to price improve it. I'm not doing it. You need to finish it. And they came all the way back. Gave me a should have given me a few $100 just as a smarty. She covered the prices of the contracts because I had it in, but I ended up selling them well at the end of the day.
Hell yeah. I was beating myself up because I took it at the end of the day as a personal play. I didn't alert it because there wasn't anyone in voice chat, and it seemed like most people had already head out. But also, I felt it was pretty risky. But yeah, I shorted this initial pop. I caught this up to 37. We took our trim as we got back to the bottom of this balance for like 10 points. So it was a very quick scalp, but it did 50%. And then I got back in and didn't alert it. And I was beating myself up about it. But dude, it was crazy. This action today was awesome. And I'm sure you noticed, but VIX broke its 106 session long streak of closing under 20 today. No, 106. The highest ever was 120.
That's fucking insane.
Yeah, the longest.
Awesome right now, right? Like everything is super. Runs great. So no wonder.
I'm just.
The tape was weird today because I was watching those orders flow in, and it was like you see the same shit that we've seen on all like the CTA squeezes and all the buy algo shit, where it just fucking it hits that bottom, they flip the switch, and then it's grind right back up to reverse it and shit. And it wasn't taking off like spots where it should have it out. Like you watch it speed up and everything on the tape, and it wasn't. I'm just watching. I'm like, these sellers, they're not going away. Like, this is something different. This is real, and it's going down further. It's not a healthy market right now.
Definitely not. I mean, I personally could care less what market does. I hope it goes down. I'm just very thankful that volatility is back. It's going to be very exciting these next couple weeks. But
Listen, yeah, today, man.
that thing tanked. I did see it. I did see it. That thing dumped, huh? You make some good money off of that? Were you playing it?
I was in other stuff. I was been focused on Nvidia this week.
Gotcha. Well, anyways, we've waited a couple minutes. We got one more person in here. Um, let's get started. Do you guys have anything you guys want to check out? Any general questions? Again, for you three guys who are either newer in here or haven't come to a charting session before, for the dogs, Kamal and Sabonite, these are mostly um, I like to call them their discussions, not lectures, right? So you guys are more than welcome to ask general questions about, psychology, price action. We can go over play reviews. We can go over a market outlook for what we're expecting for the rest of the week. We can do anything. So whatever you guys want to talk about, like I said, it's a discussion, not a lecture. So just unmute yourself and shout it out, and I'll do the best I can to help you out. So if you guys have anything you guys want to check out, let me know. Anyone want to start us off with something? You guys can mess
Can
with
we
me.
look at CS?
CS?
CS.
ZS, Zscaler, sure. ZS, what are they up to? Honestly, holding pretty strong up here still. They're definitely back at the bottom of this balance. It looks like if we want to look, so if I were to look at this right now, just I'll throw on volume profile here in a sec, but I think it's pretty clear that this was the balance, right? About 140 up to 160. They broke out of this balance and they were doing a pretty good job at holding weight over it. But today, right, big selling engulfing day over the entire range, now putting us back. They filled that previous gap, but they're still, I would argue, within this last range. Um, they don't have earnings for a while, so being in the tech space, I would imagine that they'd actually be down a little bit more than this. Um, I feel like with VIX kind of spiking here and with market sentiment pivoting, we'll get into a market outlook a little bit later, but I believe that ES is likely going to retest its lows from a few weeks ago, and so I do think that we've got more downside on the road or down the road. But here we've got something very interesting because you've got a tech name that's been holding its strength very well, and at the same time, it's not showing the same weakness that a lot of the other tech names are, all while holding a balance at the highest price it's seen in more than a year, it seems. So I do think this thing will see some downside, but I think there are better names to short. If you're looking for something super clear, let's get a little bit more fine tuned here and look at this recent balance. Right, it looks crystal clear. It looks like 68's your level here. You've got one bounce, two bounce, and then of course they spent the whole day on Friday, defending it. I would say a break back under 68 is probably the most confident, but again, this thing is definitely showing better relative strength than most of the tech names in the space right now. So while I'm imagining that we're going to continue to see some downside here over the next couple weeks, um, this thing will probably see lower with the rest of the market. But if you're looking for a really confident move, there are other names that are relatively weaker. Do you get what I'm saying?
Yeah, 100%. I'll tell you what I'm looking at it. You actually kind of have it drawn out.
Yeah,
So you have that top line. I mean, can you see that megaphone, basically, right?
pretty much.
Golfing candle put us back below that top trend line.
Yeah,
And so I agree with you on the relative strength. It's got to balance back within. And so you've got that gap down to 163. It is a stock that tends to like to fill those gaps before moving back up. And you can see it did that uh, off the gap from before the last earnings. It did it after the reaction to the earnings. It's done it multiple times, right? If you go look at the air gaps on the chart, you'll see that it drops back down, it fills it, and then it reverses back up into the uptrend. So once we got above that upper kind of trend line and we wicked, and I played it today. I took 172.50 off 175, so about around 170. So I'm thinking about it. I'll keep an eye on it tomorrow, but it does feel to me like in the next couple weeks before earnings, it wants to go get into that gap, and risking off that upper trend line. It's not a bad
You know,
setup. It's one that I like to play. So I should
looking at,
looking at
so you can see I just drew these two lines here, right?
here.
So this is, again, I'm going to throw the balance up. I'm going to trim this down to about a 6 month just so we can get a more accurate reading on the volume structure. I'll throw that on right now, but highlighted by the gray zone is my rough draft of where I think the volume shelf is. And look at that. It's picture perfect, right? You know, I've been using volume profile a while. I can typically eyeball these things, but this is the top of the taper, right? 160. And we're looking at this chart. This reminds me a lot of the SMCI chart we looked at last week. So check this out, right? The exact same zone drawn. And remember when we got this pivot and I told you this area is where buyers are going to be likely to show up, right? Even though we broke down through it today, look at where we defended all week, right? We came right into the top of the taper, and that's where buyers were stepping in and defending. And you could have played a very quality bounce off the point of control here, right? We hit that 275 and they reversed it all the way into 300 before failing these last 2 days. So I kind of expect the same thing from this what were we just looking at? ZS, right? Yeah.
Yeah.
I kind of expect the same thing where initially if market continues to see lower and sentiment is weak across the entire market, this is the first area where buyers are going to be looking to defend, right? The top of that taper and the existing shelf, right? And this is just a more complicated way, in all honesty, to say that, resistance turns to support, right? We broke out of resistance, and on the way back down, it's going to be a support zone. But this is why, right? It's that volume shelf. It's that liquidity area in the taper zone. So if you do want to short this, you've got a price gap here, but honestly, I think this thing could get lower. I think this is where you'd probably be targeting about 158 to about 162. It's a big zone. $4 on ZS isn't anything to scoff at, but if you are looking to short it under that 168 level, I'd have your targets at 165.5 for the top of the gap, about 164 for the bottom, 162 and 158. Those would be my downside targets for the short term. Again, I don't want to make any. Sorry.
Yeah, no, I'm with you on those targets. My plan for this one at least, and I may look at it tomorrow. It's got a sentiment has a lot to do with it. It can move fast. But I want to go off and attempt to get back for like 170.
Yeah.
And failing there, I wouldn't want to short the continuation under 168 because it's not enough. But on a zero DT or like a week or two, you can have risk to reward in terms of price of contracts. It can be really good. So
I like it. I think it's solid, but then again, with this type of short play, with something that's been showing this sort of strength, I would argue there are better names to short. But if you are convicted in this one, you're definitely going to want to see confluent market sentiment. You're definitely going to want to see VIX continue higher and markets generally trend lower. Right? If
I don't disagree. There's definitely better plays, but I like the lines are clean to me. When they pop out and I can see them clear, then it helps me play.
Yeah, I was just gonna say if tomorrow's a big old green day, I would not be surprised in the slightest if this thing holds that 168 and bounces right back into like 72 or 73. Yeah.
Yeah, you're right.
But yeah, this is an interesting chart. Again, I'm not too familiar with the Zscaler as a whole. I don't know their fundamentals all that well, but just from looking at the chart from a technical perspective, yeah, it's definitely much stronger than a lot of tech has been as of recent. So again, just want to reiterate to anyone else listening, there are, again, even though we kind of figured out a decent game plan for this name going forward, there are better names to short, right? Just because something looks quality doesn't mean that the market's going to agree with you, right? Just because there is a good short setup here and it's you've got an entry, you've got a target planned out and everything, doesn't mean that market's going to give you the conditions that would favor that move, right? But
Trade you take is another one you can.
yes, yes. But anyways, that was a good chart to start us off. What's going on? We got another member in here. What's going on? Free to Air. I like that name. It's a cool name. You guys want to check anything out? Any charts you guys have been looking at recently? Anyone want to talk about that Tesla earnings or the move Netflix made today? Anything like that? All of it, huh? Yeah. These sessions, you guys, are definitely primarily member led. So if you guys don't have anything you want to look at, I'll probably just review my play plans for tomorrow and probably go into the market outlook.
I have a couple more I want to check out. I just want to give it a chance.
Sure, what's up?
And you got to turn on after hours for this, but Enphase.
Enphase. I just bought some Enphase equity down here. I unfortunately bought in the other day at like 122, but I like it at these prices. I think I was telling you, dips.
After hours, man. Hang up. Get after hours. Don't say another word so you turn on after hours.
On the chart or in the group? Aw, shit. What happened?
Don't know. I mean, there was a price downgrade to like market perform versus outperform, and it was like the target was lowered to 160. And Solar Edge,
Dude, I
earnings.
just bought equity. Like, what?
Yeah. Well, I'm saying like it seems like a really odd fucking reaction, and unless I like find something that I was missing because I haven't really looked deep into like any other drivers, but this is just a move off the Solar Edge earning plus the downgrade plus the overall market sector weakness. This
I'm looking it up now because a minus, what is that? A minus 14% move after hours. Yeah, like that doesn't seem like that's just a price downgrade because that wouldn't go into immediate effect. I'm looking up. I'm on Twitter real quick, looking up what's happening. Give me a sec here. I want to read about this.
earnings come up and they usually do well on them. I guess the last few quarters have not been so great. I don't know. Down under 100 feels like it's stocks break down under 100. They spend a little time down there and then they pop right back up. AMD, other shit.
I can't find anything.
I don't know what it is, but
Dude, everyone's just worried. It seems everyone's just worried that their growth is going to slow because rates are going to be higher for longer. That's literally it. Okay, why isn't yeah.
It's not justified much of a valuation change.
I am seeing a lot of people mention the sedge guided down or the downgraded guidance. I am seeing a lot of that. Oh man, that sucks. Well, shit. You know what?
Overreact.
You know what? I'm gonna be buying more tomorrow. So good.
Yeah, I would too, man. I'm telling you, when the market overreacts in response to a different company's earnings, in another company that has earnings coming up, and present a pretty fucking wonderful opportunity,
I just
because
want to
all
look
they
at
got to
them.
do is come in not disastrous, and it'll bounce back towards fair value.
So this
It
thing,
seems like 110 to 120 for post DR seems like really kind of easy money if it dips in the mid 90s.
I'm just gonna compare this thing to a few other FSLR's PE. Okay, yeah, I know FSLR is overvalued, but SCBG and okay, so Sedge. Okay, these are all like it's right around the current you know, it's right around fair value. I don't know why it's yeah, I don't really care to know. All I know is I'm gonna be buying more. It's going. I'm adding more in the long term.
These prices, man.
It's not. It's really not. Dude, I wish the rest of the market was trading at valuations like this.
Yeah, it's like finally kind of back to a little bit of sync. I mean, this is actually overdone for phase to me. I don't know. I like 120 for earning.
Oh, you're thinking, oh, they do have earnings. Yeah, I'll be buying more before earnings easily.
I think this beating up and the sentiment away from you and all that, like it seems like a good value to take a stab for, at minimum an earnings run up or just that gap fill in earnings, right? Back to 110. Like you get calls for 120 in the 90s with earnings coming up and that gap to fill. I don't know. I like it.
Yeah, that is unfortunate. I'll definitely be having to buy some more here. Well, that's unfortunate. Yeah, I don't know what else to say. Uh, Sabbath night. How's your night going, man? You got anything you want to look at?
Yeah, question. Let's say we do get drug into, World War III kicks off. Anything like that happens. What kind of sectors do we need to be looking into
Well,
that could possibly help?
the easy answer is defense. Um, but those moves will be rather quick, and they'll fade over time. For example, like if you look at LMT, right? LMT, this was when the attack happened over the weekend, right? This thing gapped up from 400 straight to 430, right? The moves are very quickly. So if, for example, if someone does fire off a nuke, if the U.S. announces that we're going to be, you know, engaging in conflict with either side, yeah, this thing is going to pump immediately, right? And you can see following their earnings. I mean, that's unrelated that it's trended higher, but um, that's the easy answer is just defense names like Raytheon, Lockheed Martin. This one didn't get as big of a move, honestly. It only jumped from about 70 up to 73. But again, they're pretty quickly. Um, I will say that historically speaking, nobody likes war. It's not a positive. And the market itself will actually get a knee jerk sell off reaction. In theory, it's happened every time, right? But there's an interesting chart that goes around, and um, typically, if you buy the rejection or the sell off that immediately stems from the announcement of a war, it historically 10 out of 10 times has proven to be an amazing dip buying opportunity, right? And frankly, it's because the U.S. doesn't lose wars. They never. The only time that a war has greatly affected our economy was, I believe, World War One. World War One really screwed up our economy for a long time. But aside from that, every war since has done nothing but provide a great buying opportunity for long term. Um, I'm trying to think from a more complicated perspective. I would imagine, the healthcare sector probably gets a little bit of juice. Um, but, spending and subsidization of certain companies could decrease. For example, like the government may, you know, prioritize less, growth companies and would more favor those defense names and more food producers and like stuff like that. And then of course, there's another defense name that I'm blanking on that's really, really popular. I can't think of it at the moment. El Sucio, name all the defense names you can think of as fast as you can. Go.
Oh God, I think you've already named the ones I can think of off the top of my head. Raytheon, Lockheed Martin, Northrop Grumman.
Northrop. That's the one I was thinking of.
Did we see a jump in these? Don't forget where this war is, right?
Yeah,
It's oil producers.
exactly. Yes. Oh, I'm totally blanking. Oil. Every time there's a war, every time there's conflict, oil and energy goes crazy. So check out this reaction from Northrop Grumman as well, right? This thing jumped from 425 to 450 and then hit 470 in the same day. So defense names are off the bat the initial knee jerk reactions, and then you can see right here's the invasion of Ukraine, right? You know, um, that's how these things go, unfortunately, right? If you're selling umbrellas, you better hope it rains.
Now, if you can go like deep dive and figure out what the weapon systems are that are the main, systems in that theater, and figure out which company makes those, then that's the one to play if you're going with a defense contract.
Yeah, look at oil, U.S. oil since the news as well, right? Nothing but up. So oil, I can't believe I blanked on that. But yeah, oil and energy, you know, they get
Is there another type of energy other than oil that you would look at?
XLE. It's the energy sector. It's a little bit safer, just because it's just a major. It's the Select Spider ETF, and so typically if you know the entire sector is going to be hot, but you can't pinpoint a name you want to play or you want to incur that risk, XLE is the energy ETF, and it'll have it'll feel the strength of the entire sector.
Okay. Jesus Christ, look at that wedge.
But yeah, oh, I know. We were talking about this a couple weeks ago, right? This thing's setting up big time. If you look at this weekly, like it's getting ready to go visit highs. Like in fact, energy is gearing up for a major breakout here.
So,
But yeah, energy you can see since the invasion, right? This was the day. Big gap up the next day. A little sell off, but regardless, since then, while conflicts are still kind of hot topic, it's remained steady strong. Oh, that was a good question, man. You've been taking in the alerts recently?
yeah, I've been watching, but I haven't taken anything yet.
I was gonna say I just looked.
Just playing new and understanding option contracts and everything like that. So,
Do you want me to do a quick dive into how options work? Sure. Okay. So we can use XLE as an example, right? So let's say, um, okay, so essentially at their core, an option is just a bet. It's just a bet that says you think that price will be at or achieve a certain price by a certain date. That's the best way to put it. It's a bet, right? If you're buying or selling equity, there's no time constraint, right? So there's no pressure, there's nothing like that. Well, you have to think about options as insurance. That's how I like to think of it, right? The more likely something is to happen, the more expensive it's going to be, right? So you can see these contracts on XLE for next week, right? They've got 8 days of time on them. You can see, right? At the money, an at the money contract with that much time on it is basically like they're only expecting a $1 move on this thing in that amount of time, right? Because they're really cheap. Whereas if we look at something like Tesla, if we look at next week's contracts, they're expecting about a $6 or $7 move in that amount of time, right? Because Tesla moves a lot more, relatively speaking, than XLE does. Okay, so the contracts with that much time on them cost a lot more because it's much more likely to happen, right? It's like insurance. Um, but at their core, okay, so let's go back to XLE here. If we're looking at next week's contracts, everything out of the money, right? An option is the right, but not the obligation to sell or to buy equity at that price at the expiration date. So if I have 90 calls right now, that means that on October 27th, I can buy 100 shares of XLE at $90, right? And that would be profitable because it's currently at 91.8. Why wouldn't I do that? That would be a good decision. But the trade-off is that there's a premium, right? These contracts say the same thing, right? Let's say you have 93 calls. If it's still at 92 on, October 27th, these contracts are going to be worthless. Why? Because why would I buy 100 shares at 93 when I can buy it for 92 right now? So essentially, everything in here, everything you're seeing below, oh, sorry, didn't mean to do that. Everything below this line right here, where you can see, is considered out of the money. And that means that all that this value is, this $106 right here, is nothing but speculative value. Okay? So this is people betting, that's the premium they're willing to pay to have that right. Okay? But what comes with that is the risk of that premium, right? So if you say I pay $100 for this, this thing would need to be worth 94. Okay, because even though I'm in the money, if I paid $100 for the right to buy at 93 and it only gets to 93.5, let's say I buy the 100 shares and I immediately sell them. Well, that's 50 cents extra per share. 50 cents times 100 is $50. I would actually take a loss of $50 because I paid the $100 to have that right. Right?
Right.
So it's a bet. You're basically paying a premium to have access to that right or that bet. Okay? And so the only difference is options use leverage, right? So what most people do and what we do is we're not actually looking to execute these. We're not looking to buy the shares. We're looking to just trade the premium, right? Are you following here? I feel like I'm jumping around a little bit.
Yeah.
Okay, cool. So at its very basic core is it's just a bet that price will be at a certain point at a certain date. That's all it is. But the reward is that if you are right on your bet, you can buy shares at the price that you selected for that time frame, right? And it's vice versa with puts. You have the right to sell at that price on that date. So for example, I could sell 95 shares right now, and if it's at 92, I would make $3 a share, so $300, right? But if we look at these contracts, so let's do some quick math here. These spreads aren't that great. Maybe we do Tesla? Sure, let's do Tesla. So Tesla contracts expire tomorrow, and you know what's crazy? At the money contracts are still worth about $300 because people are expecting that this thing can move at least $3 tomorrow, right? However, if you're looking at something deep in the money, right? 240, what are we at now? We're at about, what do we close at? 220. So it makes sense that these contracts are worth $2,000. Why? Because we're $20 in the money. This represents the profit that one would get if they executed their contracts. If I sold 100 shares, let's do this the other side, 200, right? They're still worth 2,000. Okay. If I bought 100 shares at 200 right now and I sold them for 220, that'd be a profit of $20 per share times 100. 20 times 100 is $2,000. So because there's no time left on these contracts, there's no time premium left. They're trading at what we call intrinsic value. So everything above here has intrinsic value. These out of the money contracts have no intrinsic value. These are worthless at the end of the day tomorrow if they're not in the money, right?
Okay.
So for example, like let's look at 215. These still have some time premium on them. So at 220, these 215 calls are $5 in the money. 5 times 100 is $500. These contracts, if the price doesn't move at all, these contracts will be worth $500 at close. But you can see right now, they're about 620, 630, right? So there's still $1.30 of speculative value on these contracts. There is still a premium to pay for these, right? So everything in the money is intrinsic value plus speculative value. Everything below the money is nothing but speculative value. And I'm using the textbook terminology right now. People usually just call this time premium, right? But if you go to look this up, time premium, you might get limited results. So speculative value is what you want to research if you do that. But yeah, that's all options are in a nutshell. And because you're leveraging 100 shares at a time, that's why, for example, if Tesla moves $2.50 and you're only holding equity, you're going to make, what is that? That's like 1.2% on your equity. But if Tesla moves $2.50 tomorrow, these contracts are going to make, looks like about 60%, right? So that's a lot better. That's a whole lot better. But you're taking that risk that if they're out of the money, they'll expire worthless, and the entire day that they spend out of the money, they're going to be quickly losing value, right? Because as time ticks on, the likelihood of them going in the money decreases. So people are acknowledging that, and they're willing to pay less for them as time goes on because the bet becomes less likely. Does that make sense?
Yeah.
So that's the Greek called theta. So for example, you can see the theta here is $2.91. That's assuming that price doesn't change all of tomorrow. If we close at the exact same price tomorrow, these contracts will lose their entire value, right? Because they'll be worthless. Now let's look a week out. Let's say you're swinging 230 calls. You think Tesla's going to bounce, right? Well, there's still theta. Theta is still kicking on. So if you swung these and all of tomorrow the price of Tesla doesn't change and we still close at 220, these contracts are going to lose about $40 just because time is ticking on and it's becoming less likely. That's what we call time decay or theta, right? And so these are all things that you have to consider when taking a swing position. I'll be honest, as a day trader, you don't have to worry about theta as much. If you're playing 0 DTE contracts, it definitely matters what time of the day you're playing, for sure. It definitely matters, especially myself as an SPX trader. For example, if we look at SPX for tomorrow, right? Tomorrow, these contracts, it's right in the morning. So if we look, oh shit, SPX is trading right now. I forgot. So if we're looking at SPX, okay, these contracts right now, these calls for only 10 points away are about $1,000. In the morning, they'll probably be worth like 900. They'll barely drop at all. But if we check back in like 2 hours before close, these contracts are going to be like $300, right? 10 points out of the money is only going to be like $300 because with so much less time, the risk you're taking is so much greater, right? And there's a much higher likelihood that it will close out of the money. So, yeah,
So you have to balance that out on, the risk you want to take.
exactly. And it's just my play style, unfortunately, has made me ignore a lot of this stuff because I'm in and out very quickly. Typically, my plays last on average anywhere from about 15 to 45 minutes. Rarely am I in a day trade position for more than an hour, right? I don't like to consider myself a scalper. I don't like the idea of being a scalper, but when I review my trades and realize, like uh I was telling Osucio just a little bit ago about this play that I took. This play right here. I entered shorts right here. I was in them from right here to here. That's 5, 10, 15, 20 minutes. 20 minutes and the contracts did $250 a piece to $950 a piece. All right? And that's just because SPX is extremely it's a whole nother conversation, honestly. But it was there was only an hour and a half.
It's gross.
It's pretty intense. SPX can be pretty wild. Um,
So
oh,
whenever you sell, so whenever you did a sell right there, did you sell a call or sell a put?
I didn't sell. I bought a put.
Okay.
So, okay, this is a whole different conversation. Typically, if you're newer, I would say you just want to focus on buying contracts. It's much more straightforward. So, if you're buying a call, you want it to go up. If you're buying a put, you want it to go down, right? It's pretty straightforward.
Okay.
If you're selling a call, you want it to go down. If you're selling a put, you want it to go up. Because what's happening is when you're buying a contract, you're collecting premium, right? Or you're looking to make premium. If you're selling a contract, you're collecting premium decay. Does that make sense? It can get pretty tricky. I personally don't sell contracts.
Okay, so you bought a put right there.
Yes. I bought a put, and because we went lower, the premium on those contracts increased.
Okay.
But yeah,
If I see you put like a P after a number, that means you would go with a put instead of a call.
yeah. So if you want to look at,
Maybe going up and then the C.
so if we want to look at, yes, yes. So let me break down how I alert real quick. So I'll say lotto, right? Let's use the first alert from the day. So I usually give a pretense of how risky I think it is. Nothing is ever free. I will always put riskier, high risk, or lotto. Riskier is probably my safest plays. Those are the confident ones, and we're probably playing, something with time, maybe a couple days. I don't do swings. I don't let alert swings very often, very rarely. So typically I'll put riskier because they're short dated contracts that are going to be taking time decay, and because there's so little time on them, they're going to be extremely volatile. So I always put at least riskier on my alerts. This one this morning, it wasn't a lotto play because it was a confident entry, but we were playing SPX 0DT contracts, so regardless, it is a high risk play. If this went against us, we could have easily lost 50% or more of the play. But, and if you took that play with us, you'll know that we drew down about 30%. These contracts, we bought them at 400. They hit about 290 or 300 before we ended up going green on them. So it's not for the faint of heart. It's not for someone who is only playing one contract. It's not for someone who is brand new to options. Granted, if you're following an alert from an analyst, that's fine. I would still set your own risk preference, and I would also follow the analyst. Don't stop out unless I say to stop out. Don't take profit unless I say to take profit. If you're following an analyst, follow the analyst. They know what they're doing, right? Trust me, everyone in here, every analyst in here, I have known for a very long time. I know that they are extremely profitable and consistent. I would not hire someone to alert in here if I did not know their track record. Okay. Cobain started out in this server. He came to Bullprint in 2019. He did not know a goddamn thing about options. He showed up to the charting sessions. Huh?
So just like me.
Well, hey, everyone's on their own time frame. I've seen some people, they blow accounts for 2 years straight, but they stick with it, and finally something clicks and they're profitable. I've seen other people, they take a few losses, they don't like it, they fix those mistakes, and they're profitable in 3 to 6 months. But I will say, everyone starts in the hole. Everyone. No one just starts options and is immediately profitable. That doesn't exist. And if someone says that to you, they're lying. Everyone starts in the hole. It just matters how big your hole is, honestly. Pause. But
Everyone blows in an account.
everyone, I don't know about that. I don't know about everyone blows an account. Some people take losses and they're like, I didn't like that. I'm gonna stop trading. Or they say, oh, I don't like that. I'm gonna fix what I did. But basically everyone starts in the hole. Everyone starts out rough. It's part of it. I call it the market tuition, right? You give a little bit of money away before you start becoming profitable. Um, but anyways, Cobain started out here, right? He did not know a thing about options. He did not know a thing about price action in 2019, but he showed up every day. He showed up to the charting session. He got his questions answered, and he just hung out in the voice chat and he listened to when we were taking entries. He asked why we would take those entries. He would, review the plays, and he spent a lot of time doing it. And about a year later, I noticed that he wasn't really taking our alerts, but he was still posting in our profits channel very consistently. And I was commending him and very proud. And eventually he would come to me and be like, hey, I really like this setup. What do you think? And we would bounce ideas off each other. And then shortly after that, I was like, hey man, let me see your trade log. I noticed he was very consistent and he was taking good trades. And I said, hey man, I want you to alert for the team, get on in here. And now he is a very, a lot of people follow him in here, and I consider him on the same level as anyone else. And so, yeah, like anyone can do it. I've watched him go from blank sheet of paper to a very confident trade log and very consistent, right? Wizard, Hoosier's similar. I didn't see that he started trading, but he's been in the markets for a very long time, and I know that he stepped into options around 2020. He also came in here, was spending a lot of time with us. We would bounce ideas back and forth, and honestly, Hoosier makes way more money than I do, but that's just because he's a risk maniac. You know, like he's absurd. Like if I have a great day, I make like 3 to 4,000. If he has a great day, he cracks six figures. You know what I mean? We're not in the same ballpark. He's ridiculous. He has, I don't know. He's just a risk maniac. My max sizing on any position is like 3K. His is like 20K. So there's where the difference lies. But Wizard, he's been in the community for a long time. I know he's very consistent. I don't know him as well on a personal level. We have conversations, but we alert in a lot of the same groups, and I know that he is extremely profitable as well. Members like him, and so I actually just picked him up about, I don't know, 3 or 4 months ago. He's a newer member of the team, but I know that he's very consistent, and his channel says that alone. Kent is the same way. Kent has been in the community for a long time with me, and I know he's consistent. He's been around since about 2019. He actually helped me get Bullprint up and started. He was doing alerts in other servers before I even opened Bullprint and kind of helped me out. Now, the most interesting is Orderflow Mo. Orderflow Mo is different from most analysts because he doesn't send exact entries and exits. However, if you read his channel, that dude, you'd think he has a fucking crystal ball. He will tell you 2 weeks in advance where the market's going. And then we'll be sitting in chat playing calls. Meanwhile, he's like, "You guys, market's gonna go down over the next 3 days," and we're like, "Okay, whatever, Mo." We'll all get stopped out of our calls, and he'll be like, "I told you." But funniest thing, he taught me how to trade options in 2018.
Okay.
He ran a group, so I started with equities in 2015. I traded equities throughout high school. It was fun, mostly just passive buying, holding stuff through earnings, playing follow throughs for a couple days. And then in 2018, I got into options and it was a lot of fun. I started like anyone else, took a bunch of losses. I had 3 years of market experience and I still started in the hole with options, right? It's not an easy transition. But I joined a group like most people do. I paid a fat monthly fee. You know what they were charging? 150 a month. Yeah, you guys got it lucky over here. 60, 65 bucks a month. It's cheap, but anyways, I paid 150 bucks a month to be in their group, and he was with one other analyst. It was just a 2 analyst group. It was very personal, and they did the same thing we do with voice chats and everything. I learned a lot from him, and eventually I broke off, traded for myself for about 6 months to a year, realized I was doing really well, and then I opened up Bullprint in late 2019 after about a year and a half of trading with options. And since then, it has been a ton of fun. But Mo had a little falling out with his guy, wasn't cool. And in 2021, I said, "Hey, you should come over to my group now, you know? The Padawan becomes the Jedi." But anyways, I know we went on a big tangent there, but all that to say, if you're following an analyst, follow the analyst. They are all very experienced. They know what they're doing. Everyone's going to take losses. I take probably a handful of losses every week, but the long term will show that we are extremely profitable, right? High risk. Going back to my alert structure, right? I give you a pretense of the level of risk. This morning it was high risk because it was 0 DTE expiration SPX. And then I'll give you the ticker. It says SPX here. I don't know why I put here. I guess that just means I'm getting it right now, right? And then below that, you've got the date of the contract and the strike and option. So 10/19, that's today, obviously. And then 4280p. So that means you see the P, we're playing puts. So if you're looking at the stream, you would come over here to the right side where puts are. You find the 4280 puts, and boom, you buy them, right? Click on this guy, fills an order sheet, and send it, right? But these are next day contracts and they're SPX, so these are worth a lot more than $400, right? So not a great example of what you would see. Typically, we're not buying contracts that are $2,600 a piece. Typically, at the beginning of the day, we're focused more around this area. But and then this morning, I was like, this is pretty risky, so stay light. But most of the time, it'll just be those first 4 lines. I'll let you know how risky it is. I'll give you the ticker. I'll give you the contract and what I paid for it. And that is the most.
I see the alerts, and I'm like, I don't know what's going on with that. So that helps a lot to understand.
Yeah. So let's say you're looking at Tesla, right? you see my alert come through. You go, okay, SPX. Type in SPX as fast as you can. Click on the date, right? Hover on over to the strike price, and boom, you're in, right? It can be very quick, and I like to think that, I typically will have everything typed up. If I know I'm about to enter shorts, I will have the alert typed up as fast as I can, but I'll leave the average blank. So all I have to do is just type in what I paid for and send it. Because with SPX, if I spent 30 seconds typing this up, it could be night and day difference with what everyone gets filled at. So typically when I know I'm about to enter something, I will have most of it typed up and ready, and then we will, I'll just type in the average that I paid as soon as I get in the contracts. But yeah, I hope that was beneficial. Hell yeah, glad to hear it. We're gonna extend this session. We'll go about 15 minutes long tonight. We did spend a lot of time on that, but I'm seeing some messages. What do we got? How did Netflix hold up during that drop today? Ruby wants to know. Netflix held up really good, honestly. Yeah, they held really strong. It's like the market wasn't falling at all. There's not a thing wrong with it. In fact, I wouldn't be surprised if this thing heads higher tomorrow. It held 400. It got a little ahead of themselves, right? They tried to break it higher off the open, failed, but we bought it right back, and this thing held its value extremely well. Obviously, if you bought calls off open today, it probably didn't go so well, just because, it ended up having a red session and it was flat all day, so contracts probably took a fat, volume or IV crush, because it was the day after earnings and we didn't move much during the session, so if you played calls on it during the day, it probably didn't work too well. And honestly, puts didn't work too well either because they were getting IV crushed as well. But going forward, yeah, did you get IV crushed today? Yeah, it's gonna happen. Sometimes earning follow-throughs aren't super clean. But I would feel pretty confident saying that if market wasn't absolutely tanking today, this thing probably would have visited, this 413 to 415 area. Yeah, this next major area is about 413. That's where, the balance is from the last few months. So the last about 4 or 5 months here, we were stuck in balance between 413 and 450. So retesting that balance is I would say it's a given. Honestly, I think it's all but guaranteed. Again, that's only, 12 bucks from where we're at now, so it's not a massive move for Netflix, but retesting this balance is in my opinion all but certain, just because, let's say market has a flat day tomorrow and doesn't really head any lower. I think it'll get it done tomorrow. If you wanted something pretty comfortable, let's do some basic math here. If you hopped in 400 calls, yes, I agree with an intrinsic value of $1 right now. Think about it. We're at 401.77. The intrinsic value on these contracts is 177. These contracts should be trading at 170 bucks. But because it's Netflix, which moves a lot on its own, but also it's the day after earnings, that's why 80% of this contract is speculative value, right? Going off of what we just discussed with intrinsic value, this contract should be worth $1.77, but people are willing to pay an extra $400 almost because they're willing to price in. They're expecting this thing to move another $4 tomorrow at least, right? So, let's say this thing gets to 413, okay, and you pay for it at 500 bucks. I agree. It's not a great idea. Risk wise, it's kind of dumb, honestly. But if you're holding 400 calls, they're in the money, right? So they're safer than anything down here. But let's say this thing gets to 413. Your contracts are going to have an intrinsic value of $13 at the end of the day, right? So that means that this thing's going to do, if this thing goes from 550 to 1300, that's a gain of, 150% nearly, right? So, there's an opportunity here. Just got to hope market doesn't tank tomorrow and this thing gives you another flat day or a small pullback. Is there something you were looking to do with it, Ruby, or are you just kind of scoping it out, just wanted to see how it did? Yeah, I was looking at 412 area. Yep, perfect. Good eyes, good eyes. Yeah, that my level's 413, but 412 same area. Um, I would even give it as high as about 415. If we want to throw the volume shelf on, I want to see where it's at myself, just to see where the taper comes in. Let's see that real quick. I'm throwing volume up right now. Yeah, so it looks like your taper is actually a little bit higher. I'd say it's about 416, maybe even 418 before real volume taper starts to step back in. Your primary shelf is very clear. It's very clear here at 448, right? I've got that marked off, but your line in the sand here is actually a little bit higher than 413. It seems like it could be as high as maybe even 419. I don't think you'd get all that or expect that in a day per se, but I do think that this area, this 413, looks very confident. Hell yeah. All right. Any last questions before we wrap up? Anyone got anything they want to check out? We focused. Sure, what's up? That thing is in the dumps right now, huh?
For good reason, and it's garbage, and I don't think this company exists. Sure that
You want to see something really, really interesting that I'm noticing? So look down here. You see how their 5-year average PE was 13, but their current is 36? So let's do a little bit of thinking here, some critical thinking. What was happening over the last 5 years? COVID. COVID. When they were pumping out shots and charging a premium for them, right? And their profits looked really fucking good. I mean, seriously, 6.6 EPS, 7.7, 11.8, right? Like their EPS was on fire before COVID, dude. They were struggling even after COVID because they didn't start pumping out the vaccines until, what, like 6 months, 8 months later. So those profits you can see from these earnings, right? They were raking in money from those earnings, right? From those vaccines. And even at these valuations, the 5-year average on their EPS made sense, right? But now their earnings are getting hit, right? Look at that decline. Look at that. From 11 to 8 to 5 to 3 to negative. They're losing money now, right? And now their price is so much lower. Of course that makes sense because their growth has all but stopped and they're not even profitable at the moment, but their PE ratio is so much higher now than compared to, when it was a $400 stock. That's insane to me now. It's more overvalued now at these prices based on what they're making, based on how profitable they are and their growth. They're more overvalued now than they were at an average price over the last 5 years. Isn't that insane? That's really it's just crazy to see. Like that's a really like awful outlook for the company. Like this, seeing that they're overvalued now compared to the prices they were at averaging over the last 5 years, that's a reason to manufacture a reason to produce more vaccines, you know?
except no one wants that. You see this declining channel, right? Since let me pull it up. Oh, by the way, I wanted to say while you were looking at Tesla, there was a big Delta order of like 15,000 contracts for next week, 227.50 calls. So,
Really?
interesting information to file in the back of your mind
Jeez.
if it starts to turn. Yeah, basically from the drop off that big sell off candle back on May 24th all the way down to now. It's a really clean channel. Like very clean downtrend channel, and that lower trend line starts all the way back in March. But right now, after having dropped what 30-40% in the last couple months,
Yeah. Are you talking about Tesla?
right off. No, Moderna.
Oh, okay.
It wicked right off the bottom of that channel today, like literally right off the bottom. And I think it might keep riding it, but like usually when they hold that channel that clean that long, when it gets down to the bottom, it bounces or it peaks below. It goes back up before breaking back down and keeping the trend index. So
What do you?
I don't know. It seems like
What do you got? Something like this?
decent. From the top of from May. Know that top line from May.
From May. From May. From here?
That can draw that. And then no, off the bottom there. Those two bottoms. Yeah, close enough. But yeah, that's what I'm looking at, right?
Okay, interesting. Yeah, I mean, shit. If you were looking for just a quick little relief rally, I mean, 80 seems about as good as a spot as any. I want to look at a long time frame. I mean, you've got definitely a big old value shelf down here. I mean, if we were gonna draw something off, I would say your next probably confident spot to pick it up would be this value area right about here. I mean, we're kind of slipping into it, but this is you got to think this is from 78 down to 55. That's like it's like a 25-30% spread, you know? Yeah, it's a big one.
Just looking at it was like bottom of the structure coming into a catalyst. Some people will still be like, oh, the flu or this or whatever, their cancer thing. It's got to be valued this far down. And again, I'm watching it. I'm not racing in. I'm just seeing if it starts to build a little steam off the bottom of that channel, and then it might be a play. But I think there's better plays, and it's a shit company. And like you said, it's extremely overvalued. So personally, I've hated Moderna ever since, the entire time, basically, since it got above this price. I've thought it's garbage, and I thought it would be at this level a year ago after those earnings a year ago. Somehow they bought it.
Yeah, dude, it's definitely beat down. Oh man. Wow. 10,370 puts bought today. I'm just okay, so these are my shorts that I'm holding. 400 puts for June of next year. I'm just looking, dude. I've got a fill sitting for 1,600. So you can see I'm looking for about another $5 lower at 420. They won't get hit. I need it to slip into this value area around 414. But I've got a fill sitting for 1,600 to take my first trim on these contracts. My average is about $900. This is the big play. This right here, I want to let you guys know, this is the play that I've been stressing over the past how many months. I entered around here somewhere around 4,300 last time. But you know what's really interesting? Look at this date. Here's what I'm gonna do. I'm gonna go like this. Shit. Okay, so I entered my shorts right here during one of these days, and you saw the ones I got, right? I'm in SPY. Oh no, unlink. So I'm in June 21st, 2024, 400 puts. Okay. I've got a lot of these contracts. Okay, I've got I spent 60,000 on shorts. And right now my average is like 950, 980 I think. And they're worth about 1375. So I'm up about 50% on these shorts. But I entered right here. And if we look at the date, early June, where was VIX at? VIX was at 13, right? VIX was at 13, 14. So even though I'm like basically at the level that I entered at, right? Not even actually under it. Let's say I entered, around 70 or 80. They're not even green. Like in terms of where I shorted at. They're not even green. But the reason that I'm up on the position is this guy right here.
The market's not higher, and you burned what, months of IV.
Well, I've still got 8 months of time, so theta hasn't really taken too much of an effect. But it's VIX.
I mean, I'm just saying as a testament to like the power of panic, the power of concern. That's really what you're playing when you're playing options. Is you're playing on other people's emotions, right? Like the chasers, the people who are racing, and the FOMO and shit like that. It's not just the price action movement; it's the speed of it, or the aggressiveness of it,
Precisely.
or the probability or the fear.
So I'll let you know these contracts, when we were at highs, do you know how much they were worth? They were worth like $500, dude. I was down astronomically. I was down almost like 45, 50%. And every day I wanted to throw the towel in and just be like, dude, this market only goes up. This is stupid. Like, I was furious, Yeah. But time has prevailed. Logic is coming back into the market. Nature is healing. Anyways, this play, if we get down to my ultimate target, which I know it sounds crazy, but 3,800 is my ultimate target. It seems crazy now.
Not crazy at all.
I know. Thinking logically, 3,800 is not that crazy. And with the amount of time I have, we did how many points? We did from 84 to 37. What is that? That's 20 plus 30 plus 3. That's 53. We did $53 on SPY in how long was that? So from March to July, okay, that was early March though, wasn't it? Yeah, mid March to mid July. That's 4 months. 50 points in 4 months. If I can do, 4,300 down to 38, that's 50 points. That's also 50 points. So $50. Wait, is my math wrong? 16 plus 37. No. How is it? Oh, this isn't 37. This is 64. I am so tripping. Okay, so we did, yeah, my math is wrong. We did 84 to 64. That's 80 points. 80 points in 4 months. If we can't do, or 800 points, if we can't do 500 points in 8 months, shit, I'll be trimming the whole way down. Don't get me wrong. I'll be scaling out. But this is my ultimate target, 3,800. If I'm lucky, we can overshoot it into 36. But yeah, I'm pretty bearish if you can't tell. Anyways, I just want to let you guys know how happy I am that VIX is finally closed over 20. 106 sessions later, nearly 6 months, VIX has closed over 20. It's bonkers, isn't it? It's crazy. All right, we got another message.
Shit, Mark.
Can you do PayPal real quick? Yeah, we can do one more. PayPal, honestly, it's so sold off. I mean, like, everyone hates this stock right now, and typically that's the best time to buy. I mean, even if this thing doesn't get back up to all-time highs, even if it just stays in this value range and gets back up to like 88, that's a fucking 50% plus equity trade. So I like it here. Again, I'm still expecting market to go lower, but I think PayPal is a steal at these prices, bigger picture, long term. I mean, their current PE, dude, is it's so depressed. Like this has got to be under the standard for this service. You know, what else do we got? Squarespace. Oh, Squarespace isn't profitable. Okay. But yeah, PayPal still making money. What price did you buy those shares at? Because I'll be honest, my average is like 62. I already started buying recently. You bought today. Nice. Yeah, dude, okay, so Ruby, is this in your trading account or is this in a long-term account that you're ignoring, right? That you don't really care about. You don't need that money right now, or you're not trading with it actively. Both. Do you just have one account? Okay. I would definitely suggest separating those accounts. I would definitely recommend having a long-term account that you're buying shares in and giving time and saving for the long term, and having a separate trading account. It's definitely important to do that, right? For many, 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 many reasons we don't even need to jump into them. It's very important that you do that. You should definitely open up a second account with your broker, and you know, if you're buying equity for long term, have that in one account. If you're trading, have that in a separate account. What broker are you with, if you don't mind me asking? Webull. Okay. On Webull's desktop platform, let me look that up real quick. Doing a quick Google search. Give me a sec.
Yeah, 16 months falling wedge. It's tough to draw out. I think so long. Today is right around the bottom of it going into earnings. It's a good purchase.
What is? Say it again.
Like a 16 months falling wedge all the way back to like last June.
Yeah, we can do all the technicals we want on it. All I know is I like PayPal at these prices for long term. If you're willing to close your eyes on it for a couple years, I think PayPal is great at these prices. Like I said, I already started buying at like 62-ish. And I'll probably buy more here if market keeps dumping over the next couple days. Again, I'm 24 years old, you guys. I've got all the time in the world. I could care less if the market wants to cut itself in half over the next 2 years. I'll keep buying. Oh, well, anyways, I think we covered a lot of good stuff, covered a lot of the basics. I'm gonna wrap it up here and get ready for tomorrow. I'm gonna go play some basketball at the gym and cross up some old folks. I hope you guys have a great night. Shout out to you guys for showing up. I appreciate all you guys. And I hope you guys have a great night, and I can't wait to see you tomorrow in chat and close off the week with a bang. Some Lotto Friday action. All right, I'm gonna bounce on out of here, guys. Later, man. You have a good night. Later, guys.
these homework assignments, all of these tests, and you have the nerve. Hey, who gave us all that work though? Yeah, excuse me, I have a job. Okay, that I need to do every single day. As fault as that.